Hi, my name is Bernd Nussbaumer from macrobeat.co.uk. Today I just would like to have a quick review from the Wednesday's Federal Reserve meeting, where we quickly look at what happened to the interest rates, what happened to the dollar, and then just dollar index and look at the euro dollar and dollar yen. I mean, generally, the Federal Reserve meeting was yet another sort of stunning outcome, with the rate hike for 2019 being taken out. There's still one hike left for the 2020 meeting. But the way things are looking is that the Fed really has been more following the market in terms of taking the expected hikes out. What the market actually already did price no hikes anymore for 2019, actually even starting to price cuts for early 2020. So in terms of reaction, I would really think any sort of dollar sell-off that we started to see after the initial announcement by the Fed was sort of meant to be running out of steam. At least that's been my personal view at the time, and that's really what has happened. If you look at the first slide, which just shows the 10-year US yields, what we see there is an immediate reaction, a sharp drop in the yields on actually across the curve, 10-year, 30-year, front end 2-year. And that really is what the market's takeaway is from the channel outlook from the Fed. I don't even think the market really believes into any further hikes in 2020, especially as well given this is an election year in 2020. I can't remember really having seen the Fed hiking rates in an election year. But generally, I think the bond market was probably a little bit easier to foresee what's going to happen, especially as well with the decision on starting to wind down QT a little bit earlier than previously expected. They will start to slow it down as of May, which was previously expected in Q4. If you go over to the next slide, just as a quick look back on what happened on the dollar index, we've seen obviously a very sharp drop in the dollar just on the announcement on the Federal Reserve. We had a rather strong push lower in the dollar index and dollar weakness across the board. But what really I think should be known is that the actual pricing for the Fed, as I said, the market has already priced out all the hikes that we have seen, and so with the Fed following rather than leading, it was always sort of meant to probably run out of steam very quickly. On the next slide, there's where we actually just see, on the left you still see with the red circle the big drop from the Federal Reserve night, and then gradually we actually just moved back to the sort of same starting point where we have been before the Fed. So the dollar weakness was really just a one-day wonder rather than a significant new event. The next slide, we would see the euro dollar. So the euro dollar moved exactly to this 114.50 area that I have highlighted in the past, which to me is a sort of big make or break for the euro dollar, or the dollar, so to speak. So while below 114.5, there's just very little chance to see any further dollar weakness. And what I sadly don't have on this chart, because I've done that yesterday, is we had some horrible German PMI data this morning. And we're speaking about horrible, I indeed mean horrible. We had an expected 48 for the manufacturer PMI. We came out around 44.7, and the euro dollar now dropped below 113, which is the next sort of hurdle where we just might go back to the lows that we have seen after the ECB meeting. That in turn really starts to maybe explain a little bit more why the Federal Reserve might actually be dovish. And in that sense, we have a dovish Fed with okay data, and we have a dovish ECB that has horrible data. So you really do wonder what the ECB has to do next to actually address the true weakness in Europe. On the last slide, we see dollar yen. So dollar yen has sold off down to the critical 110.25 area. We haven't really managed to break that yet, but so from there we see this sort of comeback as well, similar to the dollar across the board, where we've just seen the dollar being unable to really roll over on the back of the Federal Reserve. The general takeaway from the Fed, I guess the equity market will have some good thoughts whether a dovish Fed is actually bullish or is more a worry about the current state of affairs in the US economy. This would really be it for me for this week, and I wish you a lovely weekend and see you all next week. Thanks a lot. Bye-bye.